Hey YouTube, so I thought I'd do a video for you on the magic formula investing because I just moved my HSA from HSA Bank to Fidelity, and I'm really excited because Fidelity offers you a lot more options to invest. And since I have a cash in that account, I said, you know what, this may be a good opportunity to do a magic formula portfolio, but also to show you guys just how it goes, because I want to track the entire set of steps to implement this over the course of 1 year. And so this is the first video to do that and the first basket. So I bought the stocks on June 2nd, and I'm going to show you the portfolio and how we implemented it, and we'll talk through it a little bit. So this is the selection basket that I made off of the Magic Formula Investing principles. This is a website called modernvalueinvestor.com, which does the same level of screening as magicformulainvesting.com. The nice thing about this one is it allows you to export the data into a spreadsheet, which then allowed me to kind of do my own kind of screening, non-scientific screening. So as you know, or as we've spoken to in the past, if you remember that the combined ranking is how we look at the securities from these selection criteria. That's a summation of earnings yield and return on invested capital. And so what I did was I rank ordered them, and this is what came out from that rank ordering. It's with Cadell up top, and then these are the ones in bold are the ones I've actually purchased. Now, let's go through why I selected these. Cadell, I actually had a conversation with a friend of mine, and he took a beating on the stock. And if you do look at the performance of this, it's kind of at a pretty, almost like a 52-week low. It's coming up in the selection criteria now, probably because it's always been a good security, but because of its just how it's been beaten up so much, I think it's now becoming a really valuable stock. Second one is Philip Morris, I should say, and I know much about that. Great company, a lot of good dividends, so definitely wanted to have that at least 1 year. Celanese, I liked it because this one just came up as a basic material, and I said, you know what, I own too much tech anyways, as well as healthcare from the securities I own, so I said, you know, I want to kind of mix it up and maybe buy something a little bit more different, a little more traditional, quote unquote. And then I looked at this one called Lamb Weston Holdings just because it's consumer defensive. I looked at all, the categories here, and outside of these known names that I know, I didn't know this one. I said, I'm going to select that. What I did was then I tracked that on a kind of my own portfolio modeling spreadsheet. It's not very, very complicated, but I basically take the screen, I produce the weighting based upon the amount that I had invested in from the HSA conversion. And I said, you know what, I'm going to weight these basically 5% across the board because I'm going to own 20 stocks, which gave me a kind of target market value price of this amount that I needed to be able to invest in each one. I inputted these target prices as limit orders in Fidelity's order management system, and that led me to being able to purchase these amount of shares, which I actually was able to purchase exact on. These current prices actually come directly from I think it's from the Yahoo website, but they have a real-time feed, 50-minute delay feed that gives me then the prices to update this spreadsheet. And then that gave me this portfolio analysis. So this is what I actually was able to invest, and this is the difference between the target price and the current price, and this is what I was actually the difference between the actual price today that I purchased at versus the current price. Now, there's one kind of special thing I wanted to talk to you about this. I knew that I had cash laying around. I don't leave it in cash. I want to have it fully invested. So knowing that, and I was going to have leftover cash after the first basket of stocks, I decided that I was going to purchase 3 times S&P 500 and Fidelity Select Technology. I've done very well with the 3 times S&P. I know that many people say it's risky because it uses options. I can't seem to have any justification of it, because if you look at this portfolio now, today it traded up on the amount that I purchased, $353 more. What that indicates then to me, or what that shows, is that as of today, when on June 4th, and I made this portfolio on June 2nd, I'm up $114, and it's a 30 basis point difference. So if we go over to the Fidelity website, this is the actual implementation, and this is what I've actually been doing on it. This is how I'm going to track it. I did mention that there's one security that was not in that list that was in the Magic Formula list, and it's Buckle. And Buckle I like just because they're in this retail space. They're competing with companies like Abercrombie and Fitch, and this actually pays a very nice dividend. So you can look that up. If you look at the chart, it's actually kind of upward trajectory linearly. And I did see something today where they said there's a lot of insiders getting out of this stock. We'll see how it goes after the first year. Could be a major loser, I don't know. But that's the whole point of the Magic Formula investing strategy. So that's the first basket of stocks. I'm going to do this again in 3 months and buy the next 5 stocks out of a new screen, and I'll show you that once we do it. And then we're going to continue to do that 4 more times, two more times after the next time I purchase it, up into the first year, where then the first basket I'm going to have to liquidate my losers and then also the winners, and then redo it again for another set. And we're going to do that hopefully for 5 years, and hopefully I'll still be around on YouTube where you can kind of watch me. If not, maybe I'll just do a final one after 5 years and say this is the how I've been doing on this security. So thank you for watching this video on the Magic Formula Investing Part 1, and hope to see you again soon.